On the Canadian economy. We saw that it expanded in the first quarter by 3.1%, above the 2.5% analysts were expecting. StatsCan says an increase in exports as well as household spending helped spur growth. For a closer look at the numbers and what they could potentially mean for interest rates from here, we're joined now by Randy Thanthong-Knight of Bloomberg News. So, Randy, break down the first quarter for us. Where was this strength coming from? I mentioned household spending there was a big component.
Yes, that's right. So the numbers really show the strength and the resilience of the economy in the first quarter, despite 425 basis point of interest rate increase. And the household spending is a major part of that. And so, in looking at where we go from here, the interest rates was raised to sort of cool down the economy, bring down inflation, but we certainly didn't see that in the first quarter.
Didn't see the impact of those higher rates at this point.
Yes, not especially on household spending, because we still see that still going quite strong, and the resilience of the household is still showing up in these numbers. Now, some economists are saying that as we go ahead over the next few months, we would see the impact of rate hikes starting to weigh down more on households, and that would reduce their spending. But we haven't seen that yet in the first quarter.
Yeah, that's a sort of lag effect when we're thinking about potentially, if people are hurt the most by higher interest rates when it comes to something like their mortgage and they don't have to renew their mortgage yet, then that's going to sort of, get delayed in terms of that impact.
Yeah, and economists are now sort of split into two camps. Like one group would be looking at the strength of the economy, the rapid turnaround of the housing market, and the reacceleration in inflation, and say that, well, the Bank of Canada should hike now, either in June or July. And then the other camp would look at what you just said, that the impact on household of interest rate will weigh down on spending, and the economy will eventually slow down, and that will therefore bring down inflation. So they're split at this point, but the majority of economists are still seeing the Bank of Canada holding rates in the next meeting, which is next week.
Okay, yeah, and then between that meeting and July, you'd presumably be getting a lot more data, more jobs reports, inflation data, to just essentially get a better sense of how those interest rates are having an effect on the economy.
That's right. So even among economists who are expecting a hike at some point, either in June or July, they are also split between either a hike in June or July. For those that said the bank should hike in June, they see it as the bank should act sooner rather than later, because there's enough evidence for them to act already. But for those who said the bank will hike in July, they see it as the bank can wait for a labor force data, which come out next week as well, one more inflation print in order to decide. And then in July, the bank would also release its next projection in its monetary policy report, so that could help sort of explain their decision a bit more.